searching for interesting businesses, valuation of companies, interviewing management and founders, managing due diligence advisors, deal structuring, monitoring of the business after it has been acquired. Does it sound like an enticing career? If the answer is yes, you've opened the right video, because today we'll be talking about private equity. The private equity industry, as we know it today, is significantly larger compared to what it used to be 20 years ago. Nowadays, pension funds, investment banks, and high net worth individuals invest their money in private equity funds. The main idea is to use the money in order to acquire private or public companies, develop and improve their business, and then resell it at a considerable profit, given that the typical investment horizon ranges between 5 and 10 years. Private equity investments are risky, very illiquid, and investors expect a significantly higher return compared to some of the other asset classes. The typical target that private equity funds invest in is a young firm with sound management and a promising future. However, sometimes they also buy businesses that are underperforming or are undervalued by the market. Most PE firms specialize in a certain niche. For example, a fund can specialize in a given industry, tech companies, fashion companies, food producers, and so on, or invest according to the life cycle stage of the target firm, seed investments, startup, late stage, LBO, distressed companies. There are not that many companies that are able to carry out very large deals, like Blackstone's $10 billion acquisition of Bank United in 2009. The three largest private equity firms in terms of capital raised are the Carlyle Group, KKR, and Blackstone. You should also know that many of the large investment banks have a private equity arm. Companies like Goldman Sachs Principal Investment Area and Morgan Stanley Capital Partners are very active in the PE field. Private equity is one of the most desired career paths in the world of business and finance. Several years ago, very few, if any, of the PE funds were hiring without relevant work experience. Today, it appears that more funds are willing to hire people with less experience. It's not rare to see intern and analyst openings within PE funds. However, if you've worked a couple of years in investment banking, consulting, or financial advisory, your chances of being hired increase significantly. The working hours are not horrible, but this isn't a 9-to-5 job either. You are likely to work somewhere in the region of 12 to 14 hours and have the weekends off if you're not traveling in order to visit some of the portfolio companies. The range of skills necessary for the job is widespread. You will have to be able to analyze a business from a strategic perspective, perform a financial valuation, and communicate with management and external advisors. Private equity offers a steep learning curve that will help you grow much faster compared to some other career paths. Salaries vary based on the firm's size and the country that you're located in, but they are generally 10 to 20% higher than the ones of investment banker analysts and associates with the same number of years of experience. This was our video dedicated to private equity. Make sure that you watch the rest of the videos from this series and subscribe to our channel. Our website, 365careers.com, offers interesting information such as company profiles, job opportunities, CV and cover letter templates, all for free of course. Follow the link in the description box and take a look.